In this video, I'll give you a simple explanation of exchange-traded funds, or ETFs, and we're starting right now. Hey guys, Elliot here. So ETFs, or exchange-traded funds, are a big part of most investing strategies, and you really need to understand exactly what they are. Fortunately, they're a fairly simple concept, and I'll tell you everything you need to know right now. To understand ETFs, it helps to understand mutual funds because these two financial instruments are alike in many ways. A mutual fund is a pool of money from many investors that is used to purchase securities such as stocks. You buy shares of the fund and then you invest it in whatever stocks the fund owns. If it's a managed fund, then fund manager will pick the stocks, and if it's an index fund, then the stocks in the fund are tied to an index such as the S&P 500 and no one needs to pick anything. So an ETF is very much the same. It's also a pool of money and it also buys stocks which you are now invested in as a shareholder of the ETF. So what exactly are the differences? Well, there are a few. The main difference is that an ETF behaves more like a stock than a fund. What that means is that there's no minimum to invest and you can buy just one share of an ETF. ETFs can also be shorted and bought on margin, meaning using borrowed money from a broker, which is something you can't do with a mutual fund. ETFs are also very liquid and can be traded easily, so you can arguably look at an ETF as an improved version of a mutual fund. ETFs started their life and became famous for low-cost tracking of indices. In fact, the very first ETF in the US, and still the most widely known and traded one today, is the SPDR S&P 500, or SPDR as it's called. It's an index fund that tracks the S&P 500. ETFs in general are relatively new kids in a financial block, first appearing in 1990. 35 years later, they become quite popular with over 12,000 ETFs available worldwide and with over 13 trillion in combined assets. Here in the US, there are just over 3,500 ETFs available with about 9 trillion in combined assets. Just like with mutual funds, you can have all sorts of ETFs, and really the sky's the limit here. When most people discuss ETFs, they're talking about market ETFs, which all invest in index stocks. You can also invest in bond ETFs, commodities ETFs, and foreign ETFs, among others. There are some managed ETFs as well, and those can invest in a certain industry or sectors or have their own unique style or investing approach. Managed ETFs are the closest to regular mutual funds. Now, as an investor, you may be interested in the advantages and disadvantages of investing in ETFs. Here are a few advantages, and if you know index funds well, you will recognize all of these. Advantage number one is the low fees. This comes with the territory of being a passive index tracker, and this is something all such ETFs have in common with index funds. The average index ETF carries a 0.15 expense ratio, with many ETFs charging much less. Advantage number two is diversification. This also comes with the territory of any ETF or mutual fund that tracks a major index. If your ETF is tied to the S&P 500, you are investing in 500 companies from just about every sector and industry. Advantage number three is low entry threshold. This is a major ETF-only advantage over mutual funds. If you check around, many desirable mutual funds have a minimum initial investment of anywhere from $1,000 to $10,000. Not so with ETFs. You can buy just one share to get started. Advantage number four is taxes. Index ETFs incur less capital gains tax because they sell far less stocks than managed funds. And finally, advantage number five is liquidity, transparency, and simplicity. A significant benefit is that major ETFs are very liquid, which means it's very easy to buy and sell them, and their holdings are fully transparent. They are also simple, user-friendly, and combined with low fees are a great entry point for a beginner investor. Now, of course, you may have noticed that all these advantages apply to index tracking ETFs, and yes, some of the positives do diminish if you invest in a managed ETF. The two advantages that do remain is the low entry threshold and the ability to short the ETF and buy on margin, though that last one probably won't interest the average buy and hold investor. Now, here are two disadvantages to ETFs that also need to be disclosed. Disadvantage number one is lack of target investing. While there are, as I mentioned, about 12,000 ETFs, that still pales in comparison to the 140,000 available mutual funds, so you may not find exactly the right ETF if you're looking for a very specific or unique investment opportunity. Many ETFs track major indices or large cap companies, so if you're looking for something a bit more exotic, you'll have to seek out a specialized mutual fund instead. Disadvantage number two is you won't beat the market if you're investing in an index ETF. This really applies to all passive index investments, and you will only do as good as the market, never better, but never worse either. Now, purchasing ETF shares is identical to purchasing shares of stock. You simply log on to your account with a discount broker, research and pick out the ETF you're interested in, and buy however many shares of it that you want. If you're looking for a place to start, here are the top 5 biggest ETFs by assets under management from this past year. The first is SPRD S&P 500 ETF Trust, ticker symbol SPY. The second is Vanguard S&P 500 ETF, ticker symbol VOO. The third is iShares Core S&P 500 ETF, ticker symbol IVV. The fourth is the Vanguard Total Stock Market ETF, ticker symbol VTI. And rounding out the top 5 is Invesco Triple Q Trust, ticker symbol QQQ. Write these ticker symbols down and research them on Google or with your online discount broker's research tools and see which currently are the cheapest to own and also how expensive each share is to see what fits your investing approach. Okay, that's really it for ETFs. As promised, they're fairly straightforward. As always, if you enjoy this content, please do like and subscribe, and I will see you in the next video.